Hey there, this is Daniel. I'm one of the co-founders of Financemate, and I'll show you how the calculation works in more detail. So first of all, I want to thank you for coming to the product. If you have any feedback, reach out to me on LinkedIn or, just write us a message. I'm really happy that you're here, and I will make sure that you get a lot of educational value out of this. So you've just done the affordability check. We've asked you for your income, and we'll use that in a bit. But I want to basically run you through how the concept of real estate investing works with an example. And then later on, after you watched this and you understood this, you can actually check out a real property and real example from our portfolio with your income and your financial situation. So yeah, you can look forward to that. What do we see here? We have an example property. The property is 75 square meters. The purchase price is 500K. And then there's always this split in Germany with a building value percentage and a land value percentage. Building value is usually around 80%, and the land value usually around 20%. So in this case, again, just to make it easier for the numbers, 400K and 100K. And then the rent here is 1,800. Okay. It's not too far off from properties that we have. The example is quite real in this case. Now, that's the property. And then you have one-time purchase costs. Okay. What are these one-time purchase costs? You have something called the land registry. That's 0.5% of the purchase price, which is sort of like a tax thing. You have the notary costs. You have to seal the deal at one point. That's 1.5%. And then you have a big expense, which is the transfer tax. The transfer tax is 6%. It can be a little bit different depending on which area you live in Germany. But for example, for Berlin, this is 6%. And then adding all of these up, we would have a subtotal of 40,000 euros. For a property of 500K purchase price, you would need 440,000 euros in money upfront. Now, depending on how you actually get to your property, there is other costs involved as well. I'll call them situational one-time purchase costs. So one thing is you have a buying agent commission that's usually 3%. It can go up to 6%. So when you work with, random agents that find a property for you that you can buy, then it can go quite high. As you can see, that would be 15,000 euros. With us, you actually have none of those because we work directly with developers, so we can save you that cost. And then the other thing is the equity and the down payment, which can be anywhere from 0 to 20, or often if you have a bit more of a standard property, is 10 to 20% in equity, which can also be a lot of money that you need to bring up front. Well, one thing that I can already say here is this really depends on the property, how the bank sees it, and on your financial situation. But it is very possible to get a 0% equity, or also called 100% financing. Okay. So this total here of 105 to 150K, which would mean all of these one-time and the situational one-time costs, can be sort of scratched out. Okay. So this, because you don't need it. And this, if we have the right property, you also don't need it. And then it's basically the 40K. And then you have running costs. Okay. The property, you have a financing, running costs, interest rate. At the moment, we're talking usually around 4.5%. So that of the purchase price would be, to start, 22.5 or 1,875 per month. Repayment rate, we usually try to keep that as low as possible. It can go up, can also be 1.5% to 2%, but 1% is ideal. Can even go below that, but that's a bit too detailed for now. So 1%, again, adds to the running costs. And then we have a subtotal per year of these two combined, which would be the 30,000 or 2,500 euros per month. Then ideally, you don't really want to manage that property. You actually want to hand that off. So you have a building management, unit management. that costs something per year, and then maintenance reserve, this is just something that you should calculate always, if something breaks or whatever. But if it's a new build, then you have a 5-year warranty. So for the first 5 years, you actually don't really need to, start a reserve. So that would make a subtotal of 840, and then we arrive at 2,570 per month, or 30,840 per year. Now, that's a lot of money to get from the rent alone, right? The rent here alone per month is 1,800. If we multiply that by 12, we are at 21,600. So you're definitely running a minus here. And that's where the tax savings actually come in, and where they make all the difference. Okay. So that's a very important part. Let's imagine you earn 100K. Again, simplified numbers, use your own numbers in our products to see how it goes for you, right? 100,000 euros. Thereof, you have income taxes that you have to pay. That's the calculation with the standard rates that would apply. If you go to Lohnsteuer of the official website in Germany, then you'll get to this number rounded more or less. Okay, so that would be your taxes that you'd have to pay. Now, with the rental income first increases your taxable income, right? Now, instead of 100K, you earn 21 or 121,000 euros. However, the interest rate is actually deductible. So is the depreciation, and so is property management costs. Okay, I put 1,000 euros here if you want to build the reserves a bit earlier. But what that means is that you have a new taxable income. All of this added up is now you don't earn 100K anymore, but you earn 78.1. To the tax office, okay? And then your new income tax would be 21,000, which means you had 10,000 euros in tax savings per year, or 857 euros in tax savings per month. Okay. One very important point here is the depreciation. The depreciation basically means towards the tax office, your property loses value every year, whereas on the real estate market, your property increases in value every year. Yeah, so there's a very important differentiation between depreciating towards the tax office and depreciating in terms of value if you want to sell the property in the future, for example, or you see property prices going up, right? So this is the depreciation is a very something that you maybe know from a business. If you buy a laptop as a business, you can depreciate the value over time. Okay, so there in the past we've had like 2 to 3%, but new builds can nowadays have 5%, which is a huge sum, and it makes a huge difference. Okay, because now if we look at this, instead of only having 1,800 per month, this one you can basically mentally add it on here, and then instead of 1,800, 1,800 plus 857 is 857 is 2,657. So now, if you just add that up here, 857, you'll end up with 2,657. Okay, and if you then compare this to your costs here, you actually come out with a little bit of a plus, right? So to give you the exact number, let me just quickly calculate that. We have 87 euros per month, or if you multiply that by 12, you are at 1,400 per year that you actually gain by buying this property. Okay, so this tax saving structure has a very, very big impact. What was before not profitable now becomes profitable, With some properties, maybe not exactly profitable, but maybe 100 years, 200 years below. But then again, you get all the benefits of the appreciation, rental increases, further tax benefits. Okay. So just to recap, that's the property. You have one-time purchase costs. You have running costs with the financing that you will also see in the example if you click on it in a little bit. You have your income, which is rent, and then supplemented by the tax benefits. And your tax benefits come from this new calculation of adding rental income on top, but then subtracting your interests, your depreciation, and your property management costs. I hope this video was helpful and got you to know the concept. Very important here is we want you to really understand the concept of how this works. And then we'll help you based on your financial situation and your financial goals. If you want to talk to us after this, just continue in the product, and then we will help you to find the right property and take it from there.